Welcome to Markets Now. I'm Michelle Rook with Brad Kooima with Kooima Kooima Varilek. We're seeing some mixed trade in both the cattle and the grains this morning. Hogs have been holding up just a little bit better, but Brad, certainly a lot of discussion this last week about the action in the cattle market from a technical standpoint. Charts look a little bit weak here, don't they?
No doubt about it. And thanks for having me on, Michelle. The aftermath of the cattle and feed report, where we gapped lower, took out the most recent lows, and yada yada. Got back to levels that we hadn't been at since June. But then, the recovery started mostly, right, I think, on the back of the cash market. But you kind of led me with the technical side of the market, and I think that we need to talk about that a little bit, because market isn't a runaway here today by any means. A nickel lower is nothing to write home about, but there's a bunch of stuff above the market. And when I tell some of these young traders, or like the college classes that I help teach and stuff, every morning there's bullish news and bearish news. Every morning, every commodity has that. Okay, so you throw each in the pail and see which one's heavier, right?
Right.
If you're going to talk about technical part of the market, there's like three reasons here why December cattle have an important area on the chart to watch. Everybody can see where the gap is. Okay, 184.42 fills that gap that we left from the on-feed report. That's 42. 184.52 is the 100-day moving average. 184.65 is halfway back of this last break. So there's a pile of stuff there. I would love it to get above that 184.65. Do I think we've got enough momentum right now to do it? Probably not. And I'm not especially bearish, don't get me wrong, but you're looking at a market here that came all the way from 177 something up to 184. Now we've used a little bit of momentum up here. So let's maybe chop around here a little bit. I'd like to see us get on top of that next big resistance level that I just described for you. And then I think you could, talk about maybe attacking and making a move back toward those old highs. And that'll be dependent a little bit, I think, upon how good the fundamentals stay, I guess, Michelle.
Yeah, and let's talk about that, because we came back last week at the end of the week because of the strength of the cash trade in that time period. What are you thinking about cash this week? Can we continue that momentum?
I thought last week was really impressive. That the feedlot had the courage, the resolve to say no to some of these lower bids. Some places those bids improved $3-4 from the beginning of the week. I think that's a indication of just how current we are. When you've got a little leverage, you dare to say no, right? My answer to your question for this week: show list, distributed, mixed, down a little bit in Texas, up a ways in Nebraska. I can tell you the show list in my neck of the woods, which is northwest Iowa, is extremely, extremely small, especially for this time of year when typically we'd have a lot of long-fed calves. We just don't have them. Guys want to sell them, cattle work, and they want out. They want to take some money once. So I think cash will be higher here again in the north. I don't think 188's out of the question. We ought to be premium in the south, given what the grade is down there. But we've almost got to be on par with the south. Continue to hear stories of cattle getting bought up in my part of the world and getting exported, like down to Kansas, with the packer paying the freight. I don't think that he would be doing that if he had an abundant supply of cattle there in his own backyard. So I still think the supply side of the market is very, very tight. And hopefully that's what underpins this market here the rest of the way going into the end of the year.
Yeah, I don't disagree with that, especially with boxes being up again yesterday on the choice. Let me throw a little bit of fly in the ointment. The funds have liquidated some of their length. We're at end of the month, and you've got the FOMC meeting tomorrow. So how does that play into this?
And maybe the last part is the part that probably, has got me with one eye over here looking at the bond market and the S&P market. Just when you think it's safe to go in the water, and we've forgotten about that cattle and feed report, let's bring up the topic of inflation and potential, recession and all the rest. That's a very real concern. Who's kidding who? When you've got cattle, which is, well, it's an elastic demand thing. Okay, if we get into a tough economy, every other time we've had it, it's caused a bit of a problem. So, there are some indications that overall general economy still remains surprisingly strong to some guy like me. This is way above my pay grade. I'm a cattle guy, but there seems like the indications are that segments of this economy still seem to be okay. But all eyes will be on if they want to hike this interest rate again or not. Hopefully not. But as far as that, the balance of the stuff, I don't know. The funds liquidated a whole pile of stuff. Here we are. Now what's our next move? Do they want to come back into the market? Is the weekly charts ruined? Not at all. So I think there's still a long-term, to me, a reason why you could have some of these funds, at least on the interest on the long side. But I kind of take it as a positive. They got the funds to liquidate a pile of their positions, and we're still alive and kicking here.
Yeah. Speaking of the funds, they've actually gone short in the hog market. We've been up the last 4 days, started off a little higher this morning, and now we're kind of turning mixed. So have they covered those short positions, and now where do we go?
Yeah. Lower, I guess, in a word. Sorry to all the hog guys out there. I'm not particularly enamored with the market here. We've rallied right back to the 40-day and the 50-day moving average here. We've had a nice correction. I don't, hogs are not the easiest thing to trade in the world because their fundamentals are so cloudy because of the vertical integration there. But I sure don't have any sense that there's any real tightness. Exports have been okay. I keep, every time we do this, I'm afraid I bring this up, but I worry that China's back on their feet with hog production. And if that's the case, they won't need as much. So you need to have perfect export, perfect demand to care of the kind of burdensome supply that we have. So been a nice bounce here. My inclination would be to think that maybe this is about the end of the correction for a minute.
Yeah. And as I mentioned, grains are mixed. The wheat lower this morning, but we've seen some slight gains at times here in corn and soybeans. But again, it's end of the month. And so is the market here searching for direction, or what's moving the market today, and what gets us out of these trading ranges we're in corn and soybeans?
I know. And, to futures traders hate sideways. Believe me. And yet that's what we've got, especially on this corn. My goodness, it's been here for 4 months. This is not the time of year where typically it pays to be bearish. We're way past 50% harvested. We should be, carving out a low. Farmer make a decision if he's going to sell or store, and then usually the market has to come up to drag a little bit out of that storage. All that old stuff seems to me to still make some sense. This is the time of year where analysts like you and I don't have much to talk about either. Okay, what's the report going to be the next time, and is it raining in Brazil? Right. I would say that there's maybe still enough at-risk areas in Brazil in that crop, very, very, very early stages, less than perfect in some places, still a little dry. My inclination would be that we'd see improved demand in the corn, which would get us up out of here because of the price. That'll improve demand. And then on the bean deal, we'll see if we can't throw a little bit of weather risk into what's happening with South America.
Yeah, we've backed off of contract highs, though, in soybean meal. That's been the price leader. Frustrating to see, though, that didn't pull really the soybean futures into new highs.
You got that right. Yeah. If I had a good explanation there, Michelle, I'd be happy to share it. I personally, very puzzled that you could have one segment of that soy complex so strong and seem like the bean market not even care. We'll maybe rebalance that a little bit, get a correction, get the soybean meal a little bit more back in line. Obviously, you still enjoy really good demand here for that protein product. World probably still looking all over for that product, and we're a good solid source for it. So hopefully we can carve a bottom out of here and get this thing going. Markets at full carry, that would kind of imply that that's the next move, but we're all impatient, right?
Yeah, no doubt. I would think processing margins, though, got to be really good right now for the bean.
Very good. Very good.
All right. Thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.